A great question that a lot of people have during a time when the market goes down is, what should I be doing while the market is crashing? And your gut instinct might tell you to go and sell absolutely everything, go hide under a rock. But in today's video, I wanted to share with you what some of the best investors in the world are doing, including myself. I'm going to be teaching you the exact strategy, what you should be doing. If you want to be a great investor, it's not financial advice, but this is just what has been proven over time. And we'll get into the statistics as well, so that way you understand why it's important to do these things. So there are really three things that you can do in the stock market. You could buy, you can HODL, hold on to dear life, or you can sell. And let's talk about each one individually, and we'll start with selling. So a lot of people might say, well, I should just go ahead and sell everything because the market's crashing and then I can buy things at a cheaper price. Well, you're not wrong in the fact that maybe you can get it at a cheaper price, but the fact of the matter is that no one has been able to continuously time the market. And the problem with this is you have to be right twice versus being right just once, because you have to sell at the right time and you have to buy back in at the right time. So that leads the argument into possibly holding on to your investments. And that's not a bad strategy at all. People do that with crypto all the time. Hold on to dear life. That's where HODL comes from. And sometimes during these times, people move their money into different higher conviction stocks, maybe less riskier plays, since the market does tend to have cycles. But the obvious answer is if you have the money to invest and you don't plan to touch that money for 5, 10, maybe even 20 years time, and you have high conviction stocks that are now trading at a discount while the market is down, it is best to dollar cost average into these stocks as the market trickles down. And you might be wondering, wait, shouldn't I just wait until close to the bottom and then really start buying? Well, again, with my previous example, you can never predict the bottoms. So if you really wanted to take the dollar cost averaging strategy to its peak momentum, what you could do is you could dollar cost average by increasing the amount that you're putting in. So let's say you have a set amount of 50 or $100 per week. Maybe you add 10% to that amount every single time the market drops maybe 5 or 10%. And again, remember that this is up to you to decide. There is no perfect science as to what is the best strategy. So try it for yourself and let me know how it works out for you. But before you get started, I'm going to share with you some statistics that I think you will find really, really valuable. If you don't mind, smash the like button, because these were really, really tough to dig up. And I think these will give you the most amount of value. These are the things that a lot of people are not talking about. So let's dive into the first point. And this one is really important to remember. And that is that dips in the market, which a dip means a 5% drop in the overall S&P 500, happens 3 times a year. So knowing that information, you already know that there are potentially 3 times every single year where you could be buying things on a discount. Isn't that kind of cool?
Wow.
Now, since we're talking about stock market crashes, it's important to talk about a complete bear market, which does happen. And even though they're rare, bear markets tend to last anywhere between 45 days and all the way up to 2 years' time. And what does an average bear market look like? Well, in the last 70 years, data analysts took a look at the market and found that the average bear market drops the S&P 500 33%. Over the last 70 years, there has been about 15 bear markets. And you're likely to see a bear market happen every 5 years. And if you were able to time the bottoms of these, which would be absolutely fantastic, you would have gone up on average almost 50% every single time from the bottoms in just 1 year span. So even though we might be in a bear market, and that's maybe why you're watching this video, let me give you some good news and what to expect if you do this strategy. The first piece of good news is that time in the market always beats out trying to time the market. And a lot of people have heard this, but always forget when things, get a little bit more emotional, especially during a downturn in the market. The second piece of good news is that after a bear market happens, a bull market follows the bear market and then some. What I mean by this is that every single time we've had a bear market, there has been a bull market that followed it every single time. And it's usually a bigger and better bull market than we've ever had before. So hopefully that gives you a little bit of relief if the market happens to be crashing right now. So I promise to give you guys a really good strategy. And as a thank you for sticking to the end of the video, this is it right here. So if the market starts to trickle down, obviously you're already dollar cost averaging in, but if the market finally has a slip of 5%, you now have the ability to add 10, 20, or 30% more than what you usually dollar cost average into the market. And that allows you to buy at a discounted rate more heavily than usual, but also leaving some cash on the table if in case that dip of 5% turns into a bear market. All right, thank you so much for watching the video. And if you don't mind, if you haven't already, don't forget to smash that like button. And I know some of you guys that watch my videos aren't subscribed yet, or maybe think you're subscribed, but maybe not. It only takes a second to just check if you are. Make sure that subscribe button is grayed out instead of red. And if it's red, it would mean the world to me if you would just go down there and smash that for me. And without any further ado, thank you all so much for watching, and I'll catch you guys in the next episode. Peace out. Feel free to check out the links down in the description below where you can get a free stock from Robinhood, $20 free from Stash, 2 or more stocks free from Webull, or $10 free from M1 Finance.